Hello, my name is Russell Myers, independent for U.S. President for 2024. I'm sure that you have heard about the string of bank failures that are occurring, at least to some degree, and what is going on with the banking system. The problems with the banking system started most prevalently with Silicon Valley Bank, and then two other banks failed, but we're not done with that yet. The problem with the banking system is not just domestic. It is an international problem that is going on. Credit Suisse went under, and they were bought out by UBS. Both Swiss banks, Credit Suisse and UBS, both Swiss banks. UBS bought Credit Suisse for $3.3 billion, which is a very low price for the size of Credit Suisse for what they used to be. Now, this didn't just happen. This came with over $9 billion in guarantees from or assistance from the Swiss government, with an additional $100 billion in guarantees from the Swiss government. $100 billion. In addition, Credit Suisse was forced to write down $17 billion worth of a particular type of high-risk bond that they had issued to investors. But they had to write those down to zero. Now, the investors in this are not very happy because the stockholders got out with something. For every, I think, 24 shares of Credit Suisse stock, they get 1 share of UBS stock. So Credit Suisse has been having problems for years now and had a lot of scandals going on. And rather recently, they wound up laying off 9,000 people. Now, they're an international company, so not all of those jobs were in Switzerland. I'm not sure how many, if any, of those jobs were in the United States, because Credit Suisse did do business in the United States. Let's go back to the domestic scene. First Republic Bank was bailed out with a $30 billion loan from a collective 11 larger banks, a short-term loan. Now, how these larger banks expect that First Republic is going to be able to repay this $30 billion, I don't know. I don't expect that they're going to be able to. Instead, First Republic is going to be absorbed by the larger banks. By the way, Bank of America used to own First Republic Bank and sold them, I think, in 2010, spun off into a separate, independent, regional bank system. Now, as these banks consolidate and fail, of course, even the ones that don't completely fail, are closing banking locations. That means that jobs are being lost. Each time you consolidate, you lose jobs. Each time you close locations, you lose jobs. These are living wage jobs. And as you eliminate living wage jobs, what happens is that you affect consumer spending. People spend less, which affects the rest of the consumer market. It's more likely that people will wind up with their vehicle repossessed, their home foreclosed on, or evicted from their apartment or home that they are renting. They may default on student loans. We've already had massive layoffs from the tech sector. Google is laying off. Twitter, famously, has been laying off tens of thousands of workers. Facebook, not long ago, announced 10,000 layoffs, and then recently announced another 9,000 layoffs. You don't just walk out of one of these jobs into another job. Many of these people are going to wind up taking lower wage jobs. As a general rule, the more the tech sector is laying off, the more the banking system is laying off. These people, as they seek other jobs, what happens is that the job market in those areas becomes overwhelmed, forcing down wages. So even the jobs that used to be living wage jobs are no longer living wage jobs. They wind up taking piecework on Fiverr or something like that. Bankers doing taxes to try and survive. But once tax season is over, good luck. Now, I find it outrageous that the FDIC has bailed out the largest depositors in these banks, people with over or companies with over $250,000 in deposits have been bailed out. But we're not done yet. Experts are saying that there are dozens of small to medium banking systems across the United States that are at high risk of going the same direction and failing the same way that Silicon Valley Bank and these other banks have gone. All of these banking systems all engage in the same risky behavior, taking on high-risk debt or issuing high-risk loans, investing in high-risk investments. They thought they were doing just great buying up mortgage-backed securities. We've seen this before. And then, as interest rates went up, then the mortgage-backed securities declined in value. They invested in U.S. Treasuries. As interest went up, the bonds declined in value. And they will continue to decline in value. The Federal Reserve is expected to announce another 25 basis point, or 0.25%, interest rate hike. This is coupled with the fact that the banks have been tightening up on credit, on new credit, that is. So it makes it harder for individuals, small and medium-sized businesses, to access credit to continue to function or to expand, to be able to compete with larger businesses in the same field. Meanwhile, the United States has a record level of debt, a world record level of debt for consumer credit and corporate debt, we have got the world's highest level of debt in history right this minute. Small and medium sized banks have an association, of course, and they are petitioning the FDIC to give them a guarantee on all deposits of any size for the next 2 years. In other words, they are asking to continue with the same risky behavior. There are no contingencies, no stipulations being placed on this request. Nothing to say that they're going to engage in less risky behavior, but if they fail, they want the taxpayers to bail them out again. Make no mistake that this is another bank bailout. It's being done differently than in 2008, but it's still a bank bailout. You can also make no mistake that the larger banks also engage in the same kind of risky behavior. You just don't hear as much about it because they're not at risk of failing, but we see more and more of a consolidation of the banking system, with small and medium-sized banks seeing massive withdrawals that are being deposited into the larger banks. The same banks that were too big to fail in 2008 and which have gotten larger since that time for the last 15 years. And now they're getting even larger. What will it take for them to fail? Well, the more that we see more and more small banks failing, more and more jobs being eliminated, the more we're going to see a decline in jobs, consumer spending, etc., and more defaults on loans as consumers wind up defaulting on loans. As consumer spending goes down, more small businesses and medium-sized businesses wind up having to shut down or at least reduce and lay off more workers. It's coming. It is definitely coming. It's headed our way right now. Now, as far as I am concerned, if the taxpayers are going, if the government is going to bail out these banks in any way, then these banks should be nationalized. It would preserve jobs. We could tighten up on banking policies, procedures, processes to stabilize the banking system. We would prevent the rising monopolization of the banking industry. We desperately need a nationalized banking system, which would be far more secure than any private banking system. I know a lot of people are going to say, well, that would be communism. No, that would be stabilizing the economy so that we don't see massive failures. Part of the problem with all of this is that investors in these banks have lost money. Now, so for some of them, a lot of them, I don't feel sorry for them. They can afford it. Yes, they've lost money, but they're not exactly broke. But a lot of investors in these banking systems that are struggling and failing are pension plans and 401ks, retirement accounts. You may have lost money out of your own retirement account. That is the problem. Now, would this eliminate the private banking system? No, it would not. It would make the private banking system have to adjust their practices to be more competitive. And of course, they could issue the higher risk debt and higher interest loans that they're so fond of already issuing. So they could take on that risk. There would be no problem, there would be no loss to investors with a national banking system, because all of us as taxpayers, as citizens, would already be invested in this. There would be no risk of a nationalized banking system failing. There would be no risk of a run on a national banking system. There would be no risk of job layoffs with a national banking system, or your local branch closing because it's not profitable enough in a rural or low-income area, which just eliminates more living wage jobs in the areas that need it the most. We could open more branches in those areas and create more jobs in those areas. And any profits made by a nationalized banking system would go back to, guess what? The taxpayers, the people that invested the money to bail out the banks. Would it stop consolidation into ever larger and larger 5 banks? Maybe, maybe not. But if one of the larger banks wants to absorb a failing smaller bank, then the FDIC would be off the hook, because the larger bank would have to pay out for the deposits of the account holders that have less than $250,000. They would have to compete with the FDIC, with the federal government. This would stabilize our economy and our job market tremendously. This could actually add jobs instead of destroying jobs. So, these are all things to take into account. But are we going to hear the current administration or Congress even suggest any of these things? No, absolutely not. Even though not doing this is a spiral downward. This is going to continue going downward. So, share this video. Talk about these subjects. If you can afford it, please donate whatever you can to help expand my campaign. And I will catch you in the next one. Thank you for watching. I hope you have a good day.